More earnings on deck, and we've got a bunch of new economy stocks in today's earnings exchange. We're going to look at Block, DraftKings, and Carvana. Here with our trades is Jeff Kilberg, KKM Financial's founder and CEO. I'm trying to guess which of these, Jeff, you might like. So let's take them one by one. We'll start with Block, formerly Square, down more than 40% in the past 3 months on spending concerns and September outages for both Square and Cash App. Wedbush focusing on monthly active users to get a sense of engagement and market share against competitors like PayPal as they try to balance growth and profitability. Jeff, would you be a buyer of Block?
Yes, I'm still going to call it Square, but yes, I'll be a buyer here of Block. And I really want to use PayPal as a proxy. If you look at the last 3 years, Kelly, it has been lock and step. Whatever PayPal has done, it has done. So yes, there's competition there. They are concerned about compressing margins or talking about rising competition with PayPal. So maybe there's even a merger because PayPal is twice the size. But at the end of the day, we are seeing this move higher in the wake of PayPal's earnings report. So I think there's expectations for a move higher. I think it makes a ton of sense at $48. That's another 10% higher. It should go and test there. But to your point, we just hit a 52-week low down at $39. When you talk about valuation, I know it's hard to value the new economy stocks we're talking about, but the 5-year average on Square has been about 88 forward times earnings. Right now we're about 25. From a PE ratio, a forward PE ratio, it's trading at 25. So I think there is a bit of a discount. I want to own it here. I think you'll continue to see this implemented into our economy globally.
One question for you. It's always on my mind when we talk about some of these stats. Like for instance, we say the options are implying a move of maybe 13% up or down for Square. What does that tell you as a trader? I mean, do you like those kinds of opportunities? Does it mean it's guaranteed we're going to get a big swing, or sometimes that move is a head fake and nothing happens?
Well, whenever you see the IV, or the implied volatility, it's definitely specific to that stock. And this is a higher beta stock. So when you talk about Square having a 13% implied volatility going into earnings, yes, I think you have high expectations for a binary outcome. It's either going to go back and test that 52-week low at $39 or have the ability to recover some of the damage and reclaim some of that valuation we talked about in its former average of PE ratios.
All right. Thank you for answering that. I'm always thinking about it. And let's move along to DraftKings. That's the online sportsbook, of course. It's up 140% year to date. They've had 5 new state rollouts. North Carolina, Vermont are coming down the pike. Of course, they're still well off the $70 highs from 2021. Canaccord says they're focusing on new features like easier same-game parlays that attract users and have higher margins. Would you be a buyer of this one?
You know, I want to be a buyer as well. What a volatile stock. It's just remarkable. When you remember its IPO, it merged with the SPAC. And then as soon as it came out, that's when COVID hit. So all basketball games, all NBA, everything stopped existing. And sure enough, you saw DraftKings go from about $12 all-time high up to $70. So I think as you kind of look at the statistics, yes, ESPN is rolling out Bet. That's Portnoy's acquisition. So there's more competition. But I think between FanDuel and DraftKings and even ESPN Bet, there's more room, because when you look across the country, Kelly, only 50% of our population is gambling or allowed to gamble on their mobile app. It's state specific still. So I think there's a ton of room here. I think you want to own it. But if you want to book some profits here, I get it. Pigs get fat, hogs get slaughtered. But this is a name, as long as you have the stomach to own it for longer term, it should continue to move higher, but it's not going to be linear.
All right. CEO Jason Robbins is on Mad Money with Jim Cramer tonight after earnings. That'll be around 6 p.m. Eastern time. We'll see what he has to say and how that report goes. And that brings us to Carvana, up more than 500% year to date with help from a kind of meme stock rally. And it's up 14% today, by the way, well off the $370 high from 2021. Consumer demand is in focus as rates remain high. Used car prices are down around 8% from a year ago, according to Manheim. And the company completed a debt exchange in late August, trying to shore up liquidity and lower interest costs as part of a broader efficiency push. I can't imagine, but maybe you're a buyer of this one, Jeff.
No, you know me too well, Kelly. At the end of the day, my fiduciary responsibility has come out. From a trading perspective, yes, it's up 450% year to date. But do you realize, Kelly, it needs to go up another 1,000% to get back to where it was at an all-time high. So the vending machine car experience, I think, is really come under pressure. If you look on a 3-year perspective, it's still down 85%. Yes, it's down 85% on a 3-year perspective. So yes, this is a company that has really felt the impact of Fed Chairman Powell in raising interest rate policy, because that capital, like you talked about, had to be recapitalized, and that really put a hurt on them. But I don't want to short this stock by any means. It's already up 13% today going into the earnings after the bell. But if you own this stock, I think it's a gift that you've gotten back to 450%. If you own it from up, where it was, then this is going to be an opportunity to maybe tax loss harvest and move on from this stock. But the vending machine, I go down the highways now, those vending machines that had the car stacked in them, I don't see cars anymore. I don't.
Well, I don't see them in my neighborhood making the same rounds that they once did. Okay, so now you get to take a little victory lap. I mean, are we at your 10-year price target yet or not? Let's show maybe a 1-month chart of the 10-year. When we were at 5, you said, didn't you say 4.5 was next? And we're at like 465 today.
I did, Kelly, but let's take that victory lap together. How about the whole crew on the exchange takes the victory lap? We've had a ton of bond experts being rolled out on CNBC, but I'm going to go back to two things. One, I've traded the 10-year note for a long time. But secondly, when you look and feel the way it was just a trade that was overextended. Bill Ackman talked about covering his trade when the 10-year went above 5%. So whenever you see the pendulum swing so hard in the futures market like that, it's expectation. And then you have the Fed 1-2 punch talking about the pause. We called on your show with you the pause that was happening, and it kind of got verified yesterday. So that's where you're seeing the 10-year down at 4.62%. That was the low yield today. And yes, I do see it tucking under 4.5%, which should continue, heard it here first, to light up that Santa Claus rally.
All right. Thank you, Santa. We appreciate your time today, Jeff. As always, Jeff Kilberg with KKM Financial.